Today's video will identify, highlight, and review 3 red-hot tech stocks primed for more gains in 2021 amid the booming IPO market. Now, before we get started, don't forget to subscribe to the Investing.com YouTube channel in order to stay up to date with all the latest videos. Now, 2020 has turned out to be a blockbuster year for initial public offerings. The Renaissance IPO ETF, which tracks a basket of newly listed US companies, has surged by a whopping 114.6% so far this year to reach a series of record highs in recent days. The S&P 500 in comparison for its part is up just 14.6% over the same time frame. So there's a pretty big difference of around 100% in the year-to-date performances of the two assets. The busy year for new initial public offerings continues, with Airbnb and DoorDash both expected to make their trading debuts later this week as 2020 comes to a close. So like I said at the start of the video, we'll focus on a trio of recent tech unicorn IPOs that have more than doubled since going public. All 3 have the potential to become market leaders in their respective fields thanks to rapid growth and a large market share opportunity. So our first name up on the list is SnowFlake, whose data warehouse software helps companies manage and share vast amounts of information. So its product has been in demand in 2021. The cloud-based data storage and analytics provider made headlines earlier this year when it became the largest software IPO in history. Its shares more than doubled from their opening price of $120 in their first day of trading on September 16th, ending up 112% at around $254. The red-hot stock has shown no signs of slowing down in the weeks following its strong debut, surging to an all-time high of $428.68 on December 8th. At current levels, Snow has a market cap of around $95 billion, putting it at a higher valuation at the expense of some of its larger rivals such as AMD and IBM. The fast-growing tech company posted better than expected top and bottom line numbers in its first earnings report as a public company on December 3rd. Losses narrowed from $1.92 a share from the year ago period to $1.01 per share in the current quarter. But even more impressive, revenue jumped triple digits, 119% year-over-year growth thanks to strong customer additions. At the end of October, the cloud data warehousing software specialist counted about 3,550 businesses and organizations as clients, including 7 of the Fortune 10 companies. So despite strong gains and lofty valuations, we know that Snow has obviously made an incredible rally so far this year. The stock still looks attractive going forward, considering the strong demand it has seen for its cloud-based services. The fact that both Warren Buffett's Berkshire Hathaway and cloud giant CRM are both betting on the company doesn't hurt either. The second name up on the list is Palantir Technologies, which provides data analytics software and services to government agencies and large companies. It made its trading debut on September 30th via direct listing, opening at $10 per share. The stock has since racked up huge gains, rallying around 186% from its starting price. Shares reached a record high of $31.21 in mid-December, giving the Denver, Colorado-based company a market cap of $50.1 billion. Palantir delivered an impressive beat and raise quarter in its first earnings report as a public company on November 12th, posting revenue growth of 52%. So obviously obviously the strong double-digit revenue growth is something Wall Street was obviously impressed with, and its stock was favorably rewarded accordingly. The upbeat results reflected increased demand for its data analytics software amid the ongoing coronavirus health crisis. Looking ahead, Palantir also boosted its full year revenue guidance to reflect year-over-year growth of 44% from the same period a year earlier. With 125 core customers, the software maker aims to expand into various other sectors and industries such as healthcare, energy, and manufacturing. Palantir recently won a 3-year FDA drug contract worth $44.4 million, in which it will focus on operating clinical trials and drug reviews and inspections. So obviously, we expect Palantir to continue to show strong growth due to robust sales and increased demand for its high-tech software tools. However, its sky-high valuations leave it little room for error. So keep an eye on Palantir as we head into the new year. A lot of talk around this company. So like I said, we like it going forward into 2021. And finally, the third name up on our list is Unity Software, which provides tools for creating video games. The San Francisco, California-based company made its trading debut on September 18th, with shares ending up more than 30% in their first day of trade. The stock has stayed hot in the days and weeks following the IPO, reaching an all-time high of $167.25. It has gained 221% from its opening price of $52 per share, earning it a valuation of more than $43 billion. The company has been flying high due to increased usage of its video game and digital content creation platform, resulting from stay-at-home social distancing measures tied to the coronavirus crisis. Now, Unity reported blowout earnings and revenue in its first report as a public company on November 12th. In addition, it also provided sales guidance that topped views, pretty much a home run report all around. The video game design software maker lost an adjusted 9 cents per share, which was better than the expected loss of 15 cents per share. Revenue, meanwhile, grew 53.5% from the year-ago period, so easily surpassing expectations, and that reflected growing demand for its video game development platform. The number of customers spending $100,000 or more on Unity's platform as of September 30th rose to 739 from 553 a year ago. So Unity has all the hallmarks of a strong, fast-growing tech company. Revenue growth is there in the strong double digits, and customer additions as well. So both are heavy tailwinds for the company. Unity also provided full-year fiscal 2020 revenue guidance, which beat consensus estimates. Its guidance would indicate a growth rate of around 39% from the video game developer software maker's 2019 revenue. So Unity Software stock still looks attractive going forward, heading into 2021, thanks in large part to its accelerating growth and the strong demand it has seen for its video game development tools. So I hope you enjoyed this video. Let me know if you agree or disagree with my thoughts on these three stocks. And if you have a trio of stocks you'd like me to go over for next week's video, I'd love to hear that as well. Leave that in the comment section. May the trading gods be with you. Have a good one, everybody.